Eric Mwathe with Mwathe.com. As a follow-up of a question I asked you, whether you could own these two stocks this past week. So here's the first stock, AMOT, and that's the monthly chart. And the other stock that I asked whether you could buy is ADSX, and I was asking whether it was a buy in terms of the timing. And here's your response. And for the most part, I agree with your response. So let's go to the charts and see what we have. So let's begin by taking a look at ADXS. Now this stock has had a massive run, and we can see that the most recent monthly buy point was during this breakout above, let's call it $10. So that was the most recent monthly breakout in terms of timing, and we see that that did play very well into our minimum requirement that the RSI must move to 3-year highs. So there was the minimum requirement, very strong move there. We also see that the stock moved above 61.8 on the monthly for the first time in more than 3 years minimum, which is great. It is a very powerful indication of intention. And we also see that on the MACDs the minimum requirement were met. So we know that on hindsight and by back testing our minimum requirement that at least one of our MACDs was making 3-year highs. Alright, now let's go back to the question, which is the timing. The most recent monthly buy point was 2 months ago. So on a monthly chart there is absolutely no reason to be chasing this stock on the monthly. Now I have to say something here, which is whenever you're timing stocks, you want to buy the stock as close to the most recent monthly buy point as possible. So let me repeat that. You always want to buy a stock as close to the most recent monthly breakout as possible. Otherwise, more often than not, you are going to be chasing. So always keep that in mind. Where is the most recent monthly breakout? So we don't see a monthly breakout as of the past week. Let's go to the weekly chart. And here's the weekly chart. As you can see, the most recent weekly breakout happens to be here at about $13. And I say the most recent breakout because it is the only breakout in the last couple of months where the stock has had 2 weeks of rest. So we want at least 2 weeks of rest, and by 2 weeks of rest I mean after making a weekly closing high, you want the stock to stay below, on a weekly closing basis, to stay below that weekly closing high. So at least 2 weeks below the high. And then on the 4th week it can break out. So here we had enough, more than 1, 2, 3, 4, 5, 6, 7, 8, 9. So we had a breakout on week number 9 or week number 10. So we have enough. So you need at least 2 weeks of rest. As an example, you can see here we only had 1 week of rest below that monthly or weekly closing high. So in reality, this is not a breakout here. This is a continuation move of the previous breakout. So again, I'm going to go back to what I said earlier. You always want to buy your stock as close to the monthly breakout as possible. Yes, you can use weekly charts, but if you can try and hone your skills to where you own the stocks that are as closest to the monthly buy point, then you're going to be finding very timely entry levels. So here we don't see any recent breakout with 2 weeks of rest. So the last week's move was actually a continuation move from this breakout here. So that is not enough weeks of rest. Now if you take a look at the daily, you're gonna see that most recently there was another 2 days of rest minimum after that daily closing high and a breakout. So yes, you can always go long here. That's a fresh breakout. The problem is you don't have as close of a monthly breakout during this past week's move. So yes, you can buy it because of the 2 days of rest, but the only problem is, remember, we want stocks that are trading as close to their monthly breakout as possible. So this one is way extended. It's almost 130% above this ideal breakout level. So I would, just for the sake of making sure you don't own a stock that is about to correct, you want to keep it as close to your monthly as possible. If the monthly is not possible, you want to keep it as close to your most recent legit entry point on the weekly. So here we see one that is breaking out on the daily, which is this next chart. So it's breaking out. Let's take a look at a 6 months daily chart here. And you can see on this 6 months daily chart, yes, you can see that there was another breakout the last couple of days here. Problem is, this one is extended in relation to the most ideal monthly breakout and also in relation to the most ideal, most recent weekly closing high. So personally, what I'm saying is, even though it is breaking out and looking like it had a couple of points above the breakout level around 22, I would avoid this type of a breakout. You want to buy them as close to your monthly and as close to your weekly as possible. Yes, there was another breakout here during this cup and handle breakout formation. As you can see that this was the highest daily closing high, and which corresponds to the weekly breakout here. So there's a breakout here that is legit because you have enough months of rest, enough weeks of rest. So that was the most recent ideal entry on the daily. All right, let's go to the next one. So in terms of timing, this is not where you want to buy a stock that has been moving very well. Let's take a look at the minimum requirements for a breakout so that we know that we are on the right path. So to understand the breakouts on the monthly chart, we need a closing high and we need at least 1 month of rest. So 1 month down below this closing high. Then any breakout after this 1 month of rest, any breakout after this is legitimate breakout, and that's a true breakout on the monthly chart. So 1 month of rest is needed for a true monthly breakout. When we go to the daily and weekly charts, a little bit different. Instead of 1 period of rest, we need 2. So on the daily, after a daily or weekly closing high, you need at least 2 days or 2 weeks of rest before you can get the earliest breakout is on week number 4. So it's a little bit different on the daily and weeklies, but the only difference is 2 days of rest, 2 weeks of rest in terms of the rest periods on the weekly and the daily. So that's how you know that the breakout is full of fresh legs and not a continuation rally. So that's important to understand. Otherwise, for example, if it breaks out on day number 3 or on week number 3, that breakout is a continuation rally. Again, it has to be 2 days of rest or 2 weeks of rest for it to be a fresh breakout with fresh momentum, fresh legs, fresh intention. All right, let's go back to the chart. And remember, we talked about we always want to be able to buy as close to the most recent breakout as possible. And the most recent breakout goes back to the breakout in February, about $24. That was the most recent breakout. So buying it here at $40 is way removed from this ideal entry point somewhere here. So you know that if you're buying it after this massive move from this ideal breakout, that would be chasing. All right, and you can see that the stock has had a nice run, in fact going back many months. And I always like to show you this because this is how we know that we are looking for stocks that are moving to fresh 3-year highs. So the ideal ultimate mois de breakout took place under $6, somewhere about $5. and the stock has had multiple successful breakouts. Here there was a failed breakout. Here this did not work very well, so you're always going to get stopped out during some breakout attempts, but there was another fluid breakout here for a nice entry. So the stocks can give you multiple entries, and you always want to buy them as close as possible to the monthly. In fact, let me say this, you are better off insisting on only buying the monthly breakout. If you can make it a point to always buy the monthly breakout, then you are always going to be in search of stocks that give you a nice entry like the most recent entry here, instead of chasing stocks during this explosive period. You always want to buy before the explosion, and if you can use the monthly chart for your entry price, you are going to be putting yourself in the best light. And just one quick note here, you can see that the MACDs were breaking out as the RSI was breaking out to 3-year highs here. So you can see that the MACDs were also breaking out at that time. So the MACDs did not disappoint, which might be one of the reasons why the stock has been on fire. MACD has had multiple breakouts during the multiple breakouts in the price. And you can see here, let me spend a second here just explaining one other thing, is if we draw a line from the previous ideal breakout level, so there was a breakout level here on the RSI, if we extend that this way, we can see that this also becomes a nice entry point for a rebound. So the breakout line becomes support here. It was tested again here for nice entry. It was tested again here and held for nice entry. And that line happens to be at 61.8 on the monthly. So always keep track of all these numbers here. So what was a breakout line did become support during all these nice entry periods. In fact, what I've done now is we are looking at a 5-year monthly chart as opposed to the previous 3-year monthly chart. So this is 5 years. I wanted to investigate what I was calling the breakout here, because I wasn't sure and I don't want to be misleading here. We see this is breaking out, yes, but it is not breaking out to 3-year highs, because this is July. If you go back to 1, 2, it was not 3 years, because 3 years would mean that it is breaking out to 3-year highs, which would be past this. So definitely not 3-year highs on this one. Did not meet the 3-year high requirement, but I'll show you why it is still a breakout and a good breakout. So let's do this. Let's show the MACDs also. And what I want to show you is that at this point, when it was breaking out in October, it was moving above 69.10. Remember, if you go back to the ultimate MOA, the breakout, we have another breakout, which is not the strongest, but another strong type of breakout is when a stock moves back above 69.10 after many years. And you can see this corresponds with a breakout here in price, somewhere in the $8 range for a nice entry there. That also corresponds, and this is important, with at least one of the MACDs moving to fresh highs there, fresh multi-year highs, and also the other MACD setting did move to fresh multi-year highs. So the only slight wrinkle in this breakout is the fact that it took place here, this period, time period, and you can see that time period corresponds with two things. One, RSI moving back above 69.1, check. MACD is breaking out to all-time highs, at least one of them. In this instant, both of them were moving above 69.10, so check. So the stock was a breakout buy sometime in October of 2000, and 13 here, and it met the ultimate Muade breakout, at least a variation of the ultimate Muade breakout there. So yes, it's been a great stock ever since then. All right, let's take a look at back to the 3-year monthly. So remember, we are talking about timing. The ideal entry was during this breakout on the monthly. We want to insist on the monthly as much as possible. We also see that there was another instance where there was another breakout in the price. This breakout in price corresponds with another breakout, or at least another move with the monthly RSI moving above 69.1. So there is another strong reason to buy the stock. And that buy point, which was again October, November of 2014, also corresponds with your MACDs. So this time period here, this breakout time period, where we have this breakout at under 17, so about $16, that breakout right there corresponds with the RSI moving above 69.1. It also corresponds with the MACDs breaking out to multi-year highs. So that's check mark. And we also see that there is another move by the other MACD to fresh multi-year highs, so another check. So we see that the stock responds very well to that breakout level. This most recent breakout took place, and the reason why we have an explosive move is because the RSI broke out to 3-year highs plus. So there was a RSI breakout. That's why I keep insisting you have to use, for timing, you want to be as close to this monthly breakout as possible so you can be part of this explosive move. And we can see here that it exploded to fresh RSI highs on the monthly. So that was why it is in an explosive run. And we can see during that time period, when this is breaking out to 3-year highs here, you can see that it corresponds with the MACDs also breaking out. The other MACD was already pointing upwards. So multi-year breakout, multi-year move in the MACDs, RSI breaking out to 3-year highs. There is your ultimate Muade breakout. Hence the stock has been explosive. Now for timing, let's go to the weekly. On the weekly, we can see that the most recent weekly closing and a breakout after 2 weeks of rest happens to be during this period here at about $28. So this breakout is the most recent breakout with 2 weeks of rest. Since then, we haven't seen any other breakout. So there you have it. In terms of timing, and based on my question whether this last week's move was a buy, irrespective of what the daily is doing, the most recent weekly buy point was here. So to me, that would be too extended to be chasing this move. What you want to do is always insist that you are buying as close as possible to the most recent monthly buy point. This is very important. If you miss this, you can take a chance with the weekly buy point. That will be the next level. And if you want to chase dailies, that's fine, but your ideal entry is the monthly, then the weekly. Let's just take a look at the daily for the sake of having this on our charts, and we can see that the most recent daily breakout after 2 days of rest happens to be here at around $34, and even that was successful. Since then, the stock has moved from $34 to about $40. So that's also on the range of successful breakout. But what I'm trying to talk about here is always insist on the weekly and on the monthlies so that you don't avoid missing out on these types of great moves. So yes, there's many ways you can time stocks on the dailies, weeklies, monthlies, but since you can only own a limited amount of stocks, my thinking is that you're better off waiting for the monthly breakout. And just to summarize this, on your weekly and daily charts, you need at least 2 rest periods, so at least 2 days of rest or at least 2 weeks of rest before this ideal and the earliest breakout being on day number 4 or week number 4. Otherwise, I would encourage you to use the monthly. And on the monthly, you need at least 1 month of rest before the earliest possible true breakout, which is going to be on month number 3. Eric Mwatha with Mwatha.com. Good luck, peace, and blessings. Woo! I am out. EACS. Mwah.